Sounds great. Great audio.
Hey guys, what's going on?
Is the podcast already started or no?
Podcast has been started. We are live.
You are the podcast.
No, you are the podcast.
All right, I'm going to go ahead and start a spaces and see if anybody wants to hear via Twitter.
Sure. And she
Okay.
said she was getting on.
It's not going to be perfect audio because it's coming through my TV, but that's okay.
How is everyone?
Good so far. I'm having technical difficulties, but we're good. We're making it.
What's going on technical difficulty wise?
Twitter completely died
It died.
on me today. It died. I'm trying to get back up. So I'm able to get on sometimes, but then it keeps crashing. So we'll see.
Well, okay, so for those who are in our Trade Talk stage on Discord, if you guys have any questions and you don't want to necessarily speak, of course, we're always, we're welcoming anybody who would like to talk. Of course, you just use the raise hand feature. And you're more than welcome to join us in this chat with Learning2Believe. And also, if you would like just to ask a question using just the chat, right above the Trade Talk stage is a channel there where you can ask staff and kind of ping us to ask your questions, and we'll read it live. So there's that. And then, Kenna, are we ready? You want to get started?
Yeah, we can definitely get started.
Well, okay.
Do you want me to do an intro? Is that what you're asking?
Yeah, go ahead and do your thing, girl.
Sorry, I'm still messing with all of the back end stuff, so that's why I'm pausing. So I'm okay, do I have all the screens up? But all right, guys. So we are Friday night. We have Learning to Believe. I am super stoked. We get to actually introduce you guys to someone that I'm finding to be a very big positive light in all of this. So yeah, I look forward to it. Tonight we have First Strike here, Hambone, Rogue, Lady, and myself on staff, and we will be hosting this obviously on YouTube and in our Discord. So YouTube, if you guys have questions, feel free to ask. Discord if you have questions. Raise your hand if you want to actually talk to any of us, or if you have a question you just want to type it, do that too, and we'll definitely get to you.
And I do have I do happen to have the spaces open on Twitter as well. So if you guys want to ask a question, just request to speak. And I don't know how exactly we're going to do it. I might have to repeat it for you or whatever, but we'll figure it out we'll just kind of remain flexible and see what happens. But so if you're listening on Twitter Space, if you're listening on YouTube or listening in the classroom, you guys can ask your questions and participate. We're totally wanting to do that today, kind of a relaxing Friday and getting ready to gear up for the weekend. So today we are super, super lucky to have Learning to Believe. And I believe that's her Twitter handle as well. Is that correct?
Yes, that's right.
Awesome. Okay, so why don't we just kick off with, we have a couple questions. Let's see. Tell us a little bit about yourself, who you are, your background, what do you do for a living? I know that you've kind of talked a little bit about it within your own Twitter spaces that are growing in popularity. Can you just kind of give our listeners a little bit of insight on that?
Okay, well, hey everyone. My name is, people call me L2B on Twitter, but my account name is Learning to Believe. But if you were to look me up, it's Live to Being You. Um, I am someone who, what I do for a living, I am a tax accountant. So I work with and deal with numbers all day long, producing financial statements for some of the basically highest rated companies within the nation, as well as overseas. I let's see. I started L2B as a point of encouragement to be able to show good works, to be able to uplift communities as well as those that are around me. How I got into the stock market, I was really tired of seeing the full, as an accountant, I am very risk adverse. And so what I started seeing all over Reddit and a couple of Twitter spaces or Twitter feeds were people YOLOing whole paychecks and getting other people to do that. And so I kind of took that upon myself to say, we need a sound voice. We need someone who is a bit calmer and who can make a wise decisions as far as financial choices to be a voice within the market. And that is why I got started. I decided that I would be that voice and that I would try to do the best that I possibly could within my ability to guide people through the ups and downs of the financial market, using the talents and tools that I have acquired over the last 10 years, I would say. So I take my background and my ability to see numbers, to pick them apart, to be able to explain the information that way. And that's been my I would say my point of access for all meme stocks, not just AMC or GME, but trying to take a deeper dive into the rules and to really explain them, take complicated things and explain them in layman's terms so that we are all up to date, pretty much.
So what you're telling me is that everyone needs to start coming to you once we hit Tendyland.
Once we hit Tendyland, I will say, being a CPA, once we hit Tendyland, I'm currently waiting to talk about any form of tax advice, primarily because in our world we are all worried about the new administration sending down a new tax bill, which may or may not reshape what we've been working on for the entire year. And so if changes happen, I want to be able to give you guys the most up to date as I get it. So then that way I can help people make the right decisions financially, tax wise, to in order to minimize your tax liability. Maybe not get rid of it, but we'll try to do the best that we can to help everybody to minimize their tax liability and to get you in contact with people who are CPAs in your area, as well as CPA, well, really CPAs and CPA firms in your area.
I am finding more and
So
more
that
about you that is just incredible. Like, it's just, I would not have put you in that realm of work, actually, just because you are so positive and such an uppity person. Like, I think of, like, my sister actually used to work in a tax office, and they were not very happy people.
they're generally not. I tend to have a very cheery disposition, and I say that the work will always be there. It will you know, we have our good days, we have our bad days, and you once you've been in the business for a long enough time, you kind of figure out how to navigate and really how to deal with um the world that is around you. And so what my saying is in the office is that I can complain. No, I tell this to staff all the time. I can complain all the time about what I don't have and what's not working and why, you know, something isn't right, or that I don't like this client, or I just don't like working with certain team members. But at the end of the day, the work has got to get done. And why, you know, be grumpy about it all day long? We all have to work long hours. And so it's the people that make the work a little bit easier. And the more and more that you stay in it, the more and more you start to see that it's a lot of fun, and you're continuously learning. And if you're working with, at least the people who work with me, I tend to be very easygoing, and I try to make it seem like, you know, tax is a fun thing, because people, as you say, they always say it's boring. People are uptight. People are anxious. You know, people don't want to be in tax. But you know, the whole point of me being in tax and why I share that love and enthusiasm is that I want to be able to share that with others who don't have that same ability to go to, you know, the firms that are at that charge the bill rate that I have. And so I do a lot of pro bono work in different communities during busy season, as well as outside of busy season, just to be able to make sure that they have the ability to they get some ability to just feel like they are important, feel like they are they're being heard, so to speak.
You're an
So
absolute, like, you are just such a superhuman. Like, I mean, you're already giving back to the community and making sure that people have, you know, the appropriate paperwork done. You're having them, you know, getting them taken care of. Like, I love that. Like, my hat is off to you.
yeah,
Like, I absolutely just adore you. Like, we don't actually get to talk like this in the spaces, like, just kind of the one-on-one and, like, just the smaller settings. So to actually get to know, like, your background and, like, how you got into it, so, like, really incredible. So thank you.
no problem at all. I'm happy to be here, and I'm super stoked to have met both you and Kenna. It's been an awesome ride,
Oh,
and I will be the
it is Kenna
first to
talking.
Oh, sorry. I'm literally looking at Lady Lovestomp, and then I'm saying Kenna at the same time. I'm looking at the both of you. See?
No, it's
Yeah.
not
Discord. I'm looking at you both. And I'm like,
I was like, wow, do we sound that similar?
but I'm looking, let me put my glasses on so I can be able to see something. Um I was literally looking at Lady Lovesong, and then I was had you both in mind. But it's been an awesome ride to meet you both, to get to know you both, and to really be a part of the overall team. And I I will be the first to say I'm not in it for the fame or the glory or whatever is being built up behind it. My sole intention is to educate and uplift, because I think if we do that, people will make, you know, smarter choices, and we can, as a society, um, get to a different point in our lives where we are all on an equal playing field. And I've been blessed to be able to have that opportunity. And so giving back and allowing others to have that same advantage is really important to me. Okay, now I can see. Yes.
Say, I think part of the coolest thing, and I know that we've talked about it before, but like the collective intelligence that is a part of this movement has been, I think, not, I know the media is doing their thing, but like they're really underselling it, right? I mean, like having the, you know, somebody who does taxes be able to talk about taxes, somebody who does deep dives on, you know, the legality side. You know, we have lawyers in our groups, you know, and just having that collective intelligence is so huge, and I mean just inspiring, right? So we are so thankful that we have you, so that you can add to that, and we're so thankful that you are willing to be a part of it.
Oh yeah, of course. It's been something that, you know, and people try to say that, you know, okay, you do a pretty good job at, you know, taking a deep dive into the rules, you know, how do you do that? It's just because I spent years and years before I got into my career as a tutor. Um, like what, 6 years? Yeah, I spent 6 years as a math tutor. And so I'm able to break it down into little chunks that people can be able to understand what's going on. You know, sometimes you get into your career field and you feel that, you know, you have to speak at a higher at in the detail and in the weeds of things, but it's always good to come out and look at the bigger picture and then try to take a deeper dive as you go. So it definitely is helpful. It definitely is something that I hope people are getting something out of, and it's just amazing to see the hive mind, or the brainiacs coming together and having a geek out session. That's what I've been enjoying the most, is the full on geek out sessions. So it definitely is, it's something that's different, I would say.
Yeah. I mean, the fact that it's actually really cool to be like smart now is such a foreign thing, right? It's just one of those funny little like instances in the world where it just kind of like flipped. Like we went into like a parallel universe. Like the nerds used to get made fun of and everything else, and now everyone's like, "Hey, you actually understand this stuff. Can you make something of this?" And it's a weird phenomenon that's actually happened.
Definitely. And I think that people, you know, understand that while when it comes to the information that we give out, it is something that they always go back to the one who was able to make them feel safer, confident, and at ease. And I think a lot of it is just the nerds are just kind of saying, okay, some of you, and we have, they're differing, varying levels, but a lot of us who are like me and like you and like Lady Lovestock, we're telling people, you know, putting their minds at ease and then giving them information that they're able to digest. So that's what makes us the cool, that's what the cool part about this is that even though we are having these full-fledged geek out sessions, and that we're talking in probably a third and fourth code to these to some people, we can always bring it back and um, help people to understand the concepts, because it's the not just having the knowledge but that understanding, and then they can go out and say, okay, this is what I learned and how can I apply this. So it's like, in essence, we are teaching them um how to go about the stock market and how to go about making good financial choices and decisions and how to apply this to other things in their life. And you know, it's an amazing thing, I would say. Like it definitely I will say the nerds are kind of ruling, and they're making us feel like, we're all powerful, but I'm way too shy for that.
Oh,
I didn't even want half of the
Believe
attention.
you.
Yeah, me. I literally did not want. I think I had to get encouraged
I was the
over
same way.
like multiple weeks. It took me like 3 weeks across, really across 3 weeks, and then I got in with a group that they just kept saying, you are smart as a whip, and you're able to get something and you catch on to things right quick. You need to say something. You need to voice your opinion. Stop trying to be quiet and hide behind the curtain. You go do something because it needs to be said. It needs to be done. And I just kept telling them, it's not me though. I like to work in the background. I'm not someone who likes the limelight. I've never been that way. And then because I've never been an attention seeker. I've always operated in the background, making sure that things, worked out for everyone. And so it's hard for me to not be able to do that as much as I would like to. So that's that. I mean, even though I'm still doing it, it's just it's something different that I have not experienced yet in life. And so you have the cross of me and trying to make sure that I get and understand how this all works, and making sure that I'm not letting anything go to my head, that I can still be just the regular L2B that had what I think, and I still get trolled by this. I had like 30 something followers in January, and now it's kind of grown up and grown out, and I can still be that person because the whole thing hasn't really changed me either one way or the other. It's just, but it is just a lot. I realize I can't say as much as I would want to say. Um, it's a whole different ball game.
Just for our listeners, I mean, I know that she doesn't want to brag, but I will brag for her. We're talking about 8,000 followers since January. So that's huge. So
That is
bravo.
incredible.
People want, they want the security in knowing somebody who knows what they're talking about. You know what I mean? And that I think you provide that in a calm manner, which is also something that is very important when emotions are so charged.
And I think that that's what I can say that because I have experienced that and I've watched that growing up. So when times get hard, don't think that I don't panic or that I don't freak out. I know that if you see me freak out, then that's going to make you freak out. And I may take things a little bit differently, but what I try to do is I never try to portray that emotion out onto the main feed. That whatever is going on, I try to make sure that I have 100% of the facts before I go out and I explain to you what is going on. Um, in a very calm tone, because how you say things, it matters. How, and especially because before now we couldn't really talk on spaces like we do right now. We couldn't talk on, and I wasn't in a cool enough Discord like this. Should have joined one a long time ago.
We're glad you're here.
But I just never understood how the mechanics worked. But I knew that when you write something on Twitter main feed, the way in which you write it, that absolutely 100% matters. And it takes a lot of time. It takes a lot of time and effort to be able to choose your words wisely, because I'm a firm believer in the words that you say lead to the thoughts that you have, that which lead to the feelings and the actions and the deeds that sometimes you cannot get back. And so watching the words that I say and knowing that they have such a vast impact on people really does take a it takes me a lot to be able to make a post, because I know that anything that I say will have that impact, not just on my feed but on everyone else's feed as it grows. And so I have to be 100% sure in what I'm absolutely posting.
You know, I think I was in one of your Twitter spaces when you said, you guys, if I end up freaking out, you know that it's okay to freak out at that point. I think Kenna was the same way. She's like, if I'm freaking out, then okay, just know that this is a moment where we can all just freak out.
Yeah, that's exactly it. I think Hambone had a question for you.
Okay. Hi, Hambone.
Hello. So,
Hi.
so you mentioned earlier that you're a tax accountant and you dislike.
Mm-hmm.
So, assuming we all hit Tendy Land and assuming you're rolling in it like the rest of us want to be and dream of, what do you want to do with it? Where do you want to go? Like, I know you want to help everybody figure out how to invest it, or at least how to manage it correctly. How do you want to get there?
If you're asking, will I stop being a tax professional? No. I love it too much. And I love being able to meet the clients that I work with, to be able to get their background story, to be able to listen to them and learn from them. Tax is all about client service, and it's not just about, doing a return, but it is about getting to know the person behind the return and knowing their story and how they operate. It's fascinating to see, a gentleman where they may not you may not have started working on them from the inception of their business or from the inception of how they got started, but when you come in and you listen and you get to understand, where they are in life and where they want to go, that is one of the most exciting things, because you not only get to meet them, their families, some of them have grandchildren, and it gets to be more and more exciting. And so I probably won't stop working. Will I open up my own firm? That is to be determined. I do have that opportunity, but I am very cautious to do that, because running a full-fledged CPA firm takes a lot of work and it takes a lot of time. And it's a lot of responsibility to make sure that you are providing the best service that you can with the tools that you have. And some of the perks of working with a bigger firm are that you have the resources that you need at all times at your disposal. So if I
Right.
ever have questions about, about the new tax code, or even a specific issue that I have never seen before, I can always go back and ask, one partner that I love working with, and I'm not gonna tell you his name, but I will tell you what he's able to do. And if I can ever get to this point, I will have arrived in this field. This guy has been in tax for about, I would say, 55 years. And I worked with him on a few projects, and what he is able to do, I could never do in my life. That man is able to look at to take a stack of papers and literally do a write-up of a tax return and get within the tens of the total tax.
Since see,
Nope.
earlier you said
Go ahead.
you're a numbers person. I don't believe that. I think you're a people person. Have you ever seen the movie The Founder?
I have not.
that's one you ought to check out. And I say that because it's about the story, and say what you will about the end result of McDonald's and how it all played out between uh, the brothers and then Ray Kroc himself, who the movie is mainly about. But it kind of shows his journey from, he's like traveling across the country, selling milkshake machines, and just kind of getting sick of it. And he's trying to basically start a franchise of McDonald's. He's trying to convince the brothers to do it again. And he's also trying to convince these banks that he's gone to many times with all these harebrained ideas and has been turned down. So I think that'd be a good one for you to check out, especially, we're all movie people here. We're all AMC holders, so might as well.
I definitely will check that one out. I have not seen that yet. But I say that I'm a numbers person, and when I say I'm a numbers person, I can take a spreadsheet and literally pick it apart without doing any, clicks or movements. I can pick it apart and tell you what's missing. I can be able to do some of the things that we do every day, that I work on every day, practically without having to, research and look up complex transactions. Just because I can figure out, I know how the numbers are supposed to work.
All
But that
that
man,
complex
go
stuff,
ahead.
like how do you stay on top of that? Like how do you personally just stay on top of, all the new tax codes and everything? What is your scientific method?
I read every day. And to be honest with you, growing up, I hated reading.
I think that's most of us.
So growing up, you could not get me to read anything in elementary school and junior high. And it was primarily because I just was always on the go. I never wanted to slow down for anything or anyone long enough to be able to read something. But as I got older and as I went to law school and I got my master's, I started finding that the more and more that I read and really was, open to the concepts and open to whatever was going to come my way, I had to be a sponge, and I had to be able to absorb and soak it in and read things multiple times and always ask questions. Um, and I found that the more and more questions that I asked, the more and more that I learned, and the more and more that I was naturally curious about the world around me. And that my curiosity would sometimes lead me into, well, to, well, it would lead me into saying, when someone would never be able to figure something out and they would say no, that it's tax, no, we can't do this. My thought process was, we just can't do it that way. How about we try it somewhere? How about we try it a different way? And coming up with a solution based upon my curiosity and the things that I saw, because in literally in the tax world, it's all about words. The rules are all about the words and how they are construed in the various sentences that are there within the tax code. And if you can find the right sentence to be able to back it up, to back up what you're doing, that allows you to have some maneuverability within the code itself, and then you can then build a substantial, reason or framework that you can present to. I can present that to the partner and tell him that, hey, this is what I see. This is how I think we can. I think we can have a position in this concept, and I think that we can solve this particular problem for this client this way. And so far, that has always worked because, like you guys see, I'm always bringing multiple forms of information. So I will grab sources from um, the hierarchy will be the tax code, the regs, and then literally documentation upon documentation about anything that the IRS has already issued a private letter ruling on or a tax memo on, and I will draw from that, and I will be able to explain I will be able to explain that way. So it definitely does tend to help when I
So you pretty much have an entire arsenal ready to go whenever you're ready to say your piece about whatever's on your mind as far as anything. You're ready to go with a full arsenal of facts behind you and all different sources of those facts. So no one can even
right.
poke holes in your argument. I can get it. I like that. I've been in a few
Yeah,
situations I've had to do that myself. So
well, it's kind of like it, and I do that. You know, we talk about. I grew up in a household where you had to make sure you were twice as good than everybody else. That you, whenever you turn something in, it had to be legit and on point. That you couldn't. There was no room for error, because if you make a mistake, then that could cause, you know, that is seen as a bad reflection on you. Whereas if someone else does it, they may not it may not be so bad. And so what I have tried to do is that, and all the things that I always do, I double check myself. Self review is really important to me. And I make sure that I don't present something unless I am 100% sure about the topic. I don't I'm willing to say I don't know. That too. I'm always willing to say I don't know about it, but I'm more than 100% able to look into it to give you a better answer. But it may not be my area of expertise.
So we have a question. Speaking of area of expertise, we have a question in the Trade Talk chat from MJ29. And he asked, if I buy options and sell it over a year later, would I get taxed as long-term or short-term gains?
If you were to buy options today, you would need to hold them until next year. If you were to sell your options today, you would need to hold the let's see, that's not the right thing. Okay, so if you bought and also exercised your options, the exercising is the taxable event. So if you exercise your options, you have to hold those for 12 months or longer to get long-term capital gains favorable rates. If you hold them for 12 months or less, that's a short-term capital gain, and you're being taxed at your ordinary tax rates, which right now could possibly change along with the capital gains rates. So before now, it would be 20% for your long-term capital gains, and then if you had ordinary, it would be upwards to, depending upon the sliding scale, 0 to 37%. If you are in a state like California, it would be from 0 to 12%, depending upon the size of the gain. New York, it has its own 3 separate tax codes. It's really bad, which is really bad. But if you're in a state like, you know, Florida, Texas, Nevada, you don't have state tax. So it really just will depend on the holding period helps you out more. So the longer you're able to hold, and after you exercise your options, the better it is for you, as you'll get the favorable tax rates. But that is only and only different. That only applies to options that you buy on the market. The differences of what when you talk about stocks and you talk about various securities, you have to pay attention to if they are ISOs versus RSUs. And you really want to make sure that you are looking at that, and because the holding periods are a lot different. And so there's different rules and different aspects of stock options and how they kind of interplay throughout the market. But if you're just buying regular call options on the AMC, on the AMC framework, then you want to hold them for at least a year. So if you've already purchased some, just make sure that you sell the ones that you got last year or at the beginning of this year. Make sure that you're holding them until you've had them for a year. So sell the ones that you've had the longest first, and then go and the ones that you've held the shortest as the last. So save those for the very last portion of whatever it is that you do.
So I'm gonna thank you so much for sharing that. I'm going to see for a minute, and I don't know how this is gonna work because we're kind of new to all of this, but for those who are on the Twitter space, I did, there was a request to speak. Is there anybody here who would like to ask Learning to Believe a question or would like to comment? Feel free to unmute your mic and we'll try to see if this works. And if not, I'll just repeat your question. And it looks like you've unmuted, but I do not hear you.
I'm here.
No, I've done the Twitter thing. Like Spaces is not my friend. And I don't hear my Spaces people. All right, I may just, you guys, for those who are on my Twitter space right now, I know I just saw that he left and maybe he'll come back. And we'll try again and we'll pause and try this again. Actually.
Gritter had a question.
Oh, hello everyone. I had a question, Learning. I love how you broke down everything about the short term and long term gains tax, but considering how the tax code for capital gains may change for next year or for this filing for this year, next year, or whatever, with President Biden's proposal to Congress. Do you see that as just a government? And do you also think it could be because of the squeeze that it's funny that because now is the time? It's one thing to raise the capital gains tax, but to try to put us in a mindset of it doesn't matter whether you sell now or a year from now, I'm going to treat everything like a short-term gain. Should just squeeze now and get it over with. Do you see that as a possible incentive towards the squeeze? Is that also an incentive to, because I have stock now that's coming up. Like I've been investing in AMC since April of last year. I mean, I've also invested years before that, but for different reasons I had to sell. But last year, when I was finally done with my car payments, I could get back in investing. This is before I even knew what a short squeeze even was. So I've always been a lifelong time investor in AMC. But now that I'm getting into the position where I'm getting a year-long gains, it's like I don't know. It just feels like this tax code, and for different people, it may hit them differently. Like maybe, and I know I'm getting long-winded, but I'm gonna end it soon. Maybe this is another way to say, hey, Vanguard, hey, BlackRock, don't try to postpone the squeeze so you can pay less taxes. Just move along and get the ball rolling and just get it over with now, because I'm going to get you either way.
Thank you for your question. That's number one. What I will say is that Biden always had it in his plan to be able to raise the tax rates. And he also, I'm thinking about it. Give me a second. You guys are going to see my brain try to work. The squeeze did not cause the raise in the tax rates. Let me just say that. The squeeze has nothing to do with what is going on the tax code. Biden wants people to get in. He wants people to pay their fair share, and so he's raising the individual tax rates for those who have above 400K. He ran on that all last year, and I don't think that is a correlation of what's to come. I do, however, think that he really wants companies to have to pay some form of a minimum tax. And the reason why that's important is that we have to have them to invest in the society, that in the communities that they live in, instead of just into building the companies bigger, better, and longer. And so he wants to rebuild, you know, the nation and its infrastructure. Now, in regards to the tax code, what he is trying to get at, he is trying to get at folks who either know how to skirt the system or find all of the loopholes. And he doesn't like for people not to pay their fair share. I think that last year, the IRS came out and they said that the IRS left almost like $1 trillion on the table because they just didn't go after some organizations, some companies who just didn't pay. And with the changing in the rules, you know, you think about things that could limit that. So you think about, you know, people, companies who have NOLs, companies that whose main purpose are to, how can I explain this without getting in trouble? I will say this. Companies who are able to minimize their tax strategy effectively and efficiently, they're always working to figure out what they can do within the year in order to reduce whatever tax that would be there. So a good way to do that is net operating loss carry forwards. They changed the rules to allow, I believe it's like 80% of your NOLs, and then the rest of it would, you know, go to your taxes. Well, because 2020 was a down year for many companies, you are now stacking up that NOL factor because of the fact that companies are coming up with losses in order to in order to maneuver around what they would have to pay for last year's tax. One sec. You would be able to get it. You technically would be able to get them, but the problem is 2020 and COVID was a really, really, really bad year for business. And it really made companies have to rethink about their bottom line. And you think about the bottom line, right? So we have your regular revenue, then you have all of your expenses that go into that, then you add in NOLs on top of that. And so that kind of wipes out any tax that companies would have. And so he wants them to have to pay at least something, because with all of the losses, they're basically saving up, you know, money. They're saving up losses that they can carry over to the next year's period, when they think that 2021 is supposed to be a more profitable year going into 2022. And in doing so, it makes it a lot, you know, it makes it a lot harder. Companies don't like that he wants to add that minimum tax, whereas you need to have the minimum tax in order to really focus in on his plan, what he wants to do as far as his infrastructure plan. And and so you have to give it one way or the other. Now, when the squeeze actually hits and folks who have been holding for quite a bit in a period of time, it goes to a different code of law. So you're now in your individual tax law. And are there ways for individuals to take advantage of the tax law? Of course. I'm not going to sit here and say that they're not. And for those of us who are in the stock market who are going to have long-term capital, long or short-term capital gains, we have to figure out ways to be able to minimize that impact on our own personal returns. So some of the ways that you can do that are, you know, if the tax code, if the tax code stays the same as if the tax code stays the same as it was in 2020 for the 2021 tax year, you'll be able to, number one, we'll talk about gifting. They allow for 100% cash gifting that will go toward your AGI. So you can give up to 100% of your AGI up until that point in time. And that's huge if you think about it. If you think about how we used to be, where your AGI was limited by a certain percentage. It's been so 2017 when the tax laws changed 4 years ago, and your AGI used to be limited by about they used to limit certain portions of it, and now you think about having an unlimited AGI. However, your mortgage interest is still limited, but your charitable contributions, allowing for 100% cash gifting for your um 100% cash gifting in order to combat whatever tax liability you have. If you itemize, it is the perfect world. Like literally, that is something that, you know, people should take advantage of. I know I will be. And I also know that I'll be trying to figure out and find charities that I can actually gift to in order to do that. And I also understand that let's break it out here. I also understand that in doing so, I'm not only just giving back, but I'm also, you know, helping out other organizations that I would want to see thrive throughout 2021, as well as going forward into 2022. There's a such thing as you can contribute your capital gains into called an opportunity zone fund, where you join it's more so of a partnership, but you join into a brokerage firm where they go into lower income areas, and they start to rebuild through real estate. And that's something that you can contribute some of your capital gains to, that will continue to grow tax. If you don't take them out and you don't do anything with them, the method is that you will, if you leave them in there for about 10 years, they will grow tax free. And then in your 10th year, you can be able to withdraw them without tax penalties for federal.
Oh, I'm sorry,
And then
wait. One more time. What was it? If you leave in there for 10 years? I'm sorry. I was listening, but I lost that.
It's an opportunity zone fund. And it's hard to start your fund. It's hard to start your own fund, but you have to be able to start it with a brokerage firm or with a CPA firm that has a link to a brokerage firm. But I don't know if if the tax laws remain the same as they are in 2020 for the 2021 tax year, which is what I don't know, which is why I'm very hesitant to give out advice, because everybody's going to go run around saying that I can go put my money into this, but I don't know if that's still going to be a viable option going out into 2021.
Yep.
Because
we'll go ahead and say, guys, these are just things that are available currently or might not even be available to you now, but this is just her knowledge based on her experiences. None of this is advice. Do your own research. I'll just throw that in there.
That is absolutely 100% true. And the reason is that because the tax code it may change and it may make it retroactive, meaning that everything that was done in the beginning of the year will fall under under the code. Things are always subject to change, and so if I'm in this with you, and it's gonna be a problem when the squeeze hits, because everybody's gonna have some form of a capital gain. What that will be, I have no idea. I know that I will probably have to go and talk to our family accountant and to figure out the best tax strategies for me, and to combat it with, you know, the knowledge that I have in terms of the overall market and in what I would do. I think that and I'll just tell you what I plan on doing. I plan on setting up a few different trusts. I plan on setting up my own probably if I'm able to get into it, I probably will do an opportunity zone fund. I'm gonna gift as much as I possibly can. I may contribute to a donor advised fund, but that's probably not going to be me for 2021, maybe 2022. Let's see what else. I may even dabble into some real estate, but you know, with the pricing, with the prices going up and up across the real estate market, that is something that I will have to watch out closely for, because you know that in and of itself is a passive activity if I'm not fully, you know, completely involved with it. So that adds on another complexity. But I will contribute as much as I can to an IRA or a Roth IRA after paying taxes on those funds. I may set up a charitable remainder trust where I can take distributions from the trust, and whatever else is there will go to a charity of my choice at the end of my time span.
We do have a couple questions. First, if you could actually explain what a trust is, since a lot of people might not know exactly what that is.
Great question.
Okay. Interesting. Okay, so what a trust is, it is a fiduciary relationship where you put the assets that you hold near and dear to you inside of a flow through entity, and that entity allows for the legal protection of the trustor's assets. So if I were to put my assets into a trust, it's supposed to protect those assets from being able to back up. A trust is really set up. The origins of a trust were really set up to protect folks who were either going to protect assets just in case other things would arise throughout the tax year, and so it would provide enough. That's a good question. I don't know if I can explain that in layman's terms. But I will give it a try. Basically, a trust is a fiduciary relationship in which I give someone else the authority to hold the property or title of the assets. Really, for, let's say you have a parent who happened to pass away. What we'll do is that we'll create what's called a trust. A trust is a document that tells you about what the will of the person who either passed away or what they want to have happen to the assets that are in their name. So what I have already done was to put assets that I own into a trust, and the trust basically says, if something happens to L2B, here are the assets that sit here, and they are protected from being taken by the state in which I live in. So California, if you don't have your assets within a trust, California can come in and say those assets are now subject to probate, and you have to be able to say what assets actually reside within the trust in order to protect it. But a trust is basically a fiduciary relationship between two people, the trustee and the trustor. And in that, you're giving the trustee the right to go about how do I explain it? I'm having a brain fart. You guys bear with me. Because it's not a simple topic. It's not really a simple as simple as that. I'm trying to.
Are there certain tax benefits with having your money in a trust? Because when I hear of trust fund, the first thing that runs in my mind, I know this is not to sound condescending to people who have trust funds, because trust funds are a good thing. But the first thing that comes to my mind when I hear trust fund is Bruce Wayne and his family, leaving him money in a trust fund. When they pass through, through the events, in Batman. So that's the first thing that comes to my mind is the Bruce Wayne, trust fund, and he's set for life. So I'm sure there are some kind of tax benefits to not take away, all that billions of dollars of wealth that Bruce Wayne has.
Right. So I can explain it this way, and this is probably a much better definition than I was going to give you. A trust is traditionally used to help minimize estate taxes, and they offer benefits if you have an estate tax plan. And what it allows for a fiduciary arrangement between a third party, or who would be the trustee, to hold the assets on behalf of the beneficiary or the beneficiaries. Sometimes there could be multiple children within the trust, and they can be arranged in quite many different ways. And the trust document talks about the way in which the assets that within the trust are to act or to behave. And they talk about how the assets are then passed down to each beneficiary, how much each beneficiary is supposed to get a distribution of, the basically the amounts within and held within the trust. It also depends on the type of trust. It could be there are many types of trust, and I'll go over them. You have a marital trust, a bypass trust, what people mainly look at is a charitable, remainder trust. You could have grantor annuity trust, but all in all, these are all tax benefits for estate tax planning purposes. And so when we talk about estate tax planning, you're doing that because right now, before it changes, the estate tax credit is above. I think sits at 11 million per couple and 22 million, 11 million per individual and 22 million per couple. And so when you talk about the estate and you talk about the assets that belong to a trust, that separates out the tax that would be associated by the estate and also the trust. So you can designate ownership to the trust to hold those assets so that they are not a part of your estate tax return. That's a better way of saying it. And an estate tax return is something that you file, that your loved ones will file on your behalf if you have assets that sit outside of your trust that equal to or are greater than the estate tax credit. which is about, for most individuals, that's about 11 million in counting and some change. And it depends on what you do all year to figure out whether or not that credit is going to be bigger or smaller. Gifting definitely makes that credit smaller as you get further and further up the pipeline into, anything past, I think it's 15,000 for this year, will trigger you to have to make a 709, which is a gift tax return. And so all of the trusts in estates, they kind of go hand in hand along with gifting, because they're all minimization strategies for your estate. So if in my estate I have, $30 million worth of assets, I'm going to try to move, 19 million of that into a trust, into various trusts. Sorry, my question. I'm going to try to move that into a trust, and it can be a charitable remainder trust. I may do a grantor annuity trust. I may even just keep it, simple and do a simple trust, which just is a basic run-of-the-mill type trust, or I could do a complex trust. And I can give you the definitions between a simple trust versus a complex trust. And those are the two that, people see all the time. So a simple trust means that you always distribute all of the income every year. So any income that you have, you distribute any income that you make throughout the year, you can distribute that out to the beneficiaries. But you can do all of that, but you cannot distribute the principal within the trust. And the principal is the amount that the original trustor put into the trust. So if I have a simple trust and I put in, let's say I put in my $19 million and it grows another 20,000, I can distribute out that 20,000 in a simple trust, but I can't do that I cannot touch that 19 million, because that's the way that the trust is set up. Whereas with a complex trust, I can do both. I can take a distribution from the principal as well as my earnings, and I can also make a contribution to charitable organizations that way. What will happen is that as the trust, goes along, each beneficiary will receive a K1. And in that K1, you'll have income, interest, capital gains. It'll have your credits, some deductions that are there. It will also have, this may be gone by the time 2021 ends, but you'll have your Section 199A credits that are absolutely there. It just depends on how you set it up. Whereas if you have what I keep saying is just a charitable remainder trust, you have to do more accounting, because there's more involved. There's more involved fundamentals and methods of how you account for the income that is within that charitable remainder trust. And so it really just depends on what your comfortability is and what you want to do, which is why I always say you must go talk to a CPA in your area to determine what is the best method for you. I may not know what the best method is, and so you need someone to sit down with you, look at your financials, look at what it is that you want to do and want to accomplish. If you're just kind of breaking into this, what we tell people in accounting and when we first meet them are, do you have multiple, I will go through this bill. Do you have multiple bank accounts? Do you have a bank account just for your regular everyday, run-of-the-mill stuff? Do you have a splurge account? And okay, well then, because you want to be able to take care of and have a little fun every once in a while, do you have an account that can help you to, what are you trying to build up to? If you're trying to build up to a home, do you have that? And that's part of the conversation. Then we asked, do you have a will? And we ask that because we don't want, we want to know how you want those assets to be able to, be passed on once you leave. Then we ask, do you have a trust? And if you don't have any of those items, a will or a trust, we put you in contact with an attorney that we work with a lot. And they will then, help you to figure out the best language to put into that.
So, Living to Believe, we have a quick question in the chat.
Okay.
It's definitely related. It's speaking of trust and a different way of looking at trust, a different meaning of the word. But Nikki Lynn asked, when trying to find all these people to help manage our money after all of this, right? So you're telling us, it's best to go find your CPA and kind of get these questions answered. How do we know who to trust? I'm assuming that's an assumption there, but he or she says, I don't know anyone personally that would be able to recommend anyone.
Do we know what city she's in?
Uh,
I guess it doesn't really matter the city.
They are answering here in a second. Utah.
Okay, so what you want to do is you want to go to the major city that's in Utah. Go to one of the major cities that is located in Utah, and you want to find and look up a let me see if I can find it. You don't really want you want to get one that's within the top 100 of the nation, and you also want to get one that works with large accounts, because not every CPA firm is exactly the same. You really have to make sure that they deal with specifically high net worth clients, that they know how to deal with the aspects of what you're looking for. And you want to make sure that they have a pretty good and robust what we would call a private client service department that really specifically deals with high net worth. And I say that because just going to a regular CPA firm, they may not be able to deal with those numbers in the smaller town areas. And so you really want to make sure that you can get to someone who can get you some help. Some of the ones that you'll see, I will say your best bet if you're in Utah, I would say go to Salt Lake City, which is which is where probably most of the CPA firms are. And I'm trying to see if there are any that I have talked to before. Oh yeah. Okay, so there's Sorensen and Company. They're a company based out here too. And there are a few others, but what I will do is when when this all kind of ends and finishes, what I'll do is I'll post some CPA firms that are across the states for people to be able to use, because the state law is, and the reason why people ask me all the time, can I do your tax return, and the answer is no, because state laws are different. I live in California, and so the state laws in California are different from the state laws that are in Colorado, Montana, Michigan, Mississippi, Louisiana. It's all different tax codes and laws. And so I'm only licensed to practice inside of California at this point. But what we do is sometimes if we have a California resident, we will prepare returns for those that live outside of the state, if they have that tax liability. But what I will do is try to post one. Some of the top ones that, like I mentioned, you have Sorensen and Company, and they're a firm out of California that has a base in Salt Lake City. They also looking at some of my own contacts. Yeah. I'm gonna go through my list of contacts to see if we have a firm that's out there, or if I can find you someone to get connected with. But the whole point is to find a team that you trust, find an accountant that will help guide you to, and you can also ask your broker. So the nifty thing about, accountants, brokers, and attorneys, we all want to talk to each other. So if you have a broker, call your broker and ask them, can they recommend you an accountant in your area? Number one, they'll get a referral bonus for referring you to them. And number two, they almost always know someone that is perfect for you and what you have. And the relationship that will build will be they're able to communicate your day-to-day activity and what you want to do for tax time to your accountant, and we can talk back to them. And that is something that we absolutely need to have, because a lot of times we talk to clients and we want their 1099s. We want to know, did you do something during Q1, Q2, Q3, and Q4 that would cause you to have a tax liability? And oftentimes we get that information from the broker. And so your broker will automatically have someone in your area who will be able to help you figure that out. And then not just that, they'll be able to guide you to, once they hook you up with the accountant will then send you to an attorney that they work with on a regular basis. And they usually try to send you to ones that are they won't try to price gouge you. They will try to just help you to get the basic documents and stuff up so that you can be ready to do that estate tax planning that we talk about all the time. And I hope and trust that everybody's going to do that at some point. But that's generally how the network will work. If you're new to us and you never seen us, usually we'll get a referral from a broker, and we'll be able to talk and communicate with you about, we'll set up a meeting, we'll talk about what your goals are, what we want for you, and how we can help you reach those goals. And then we will then guide you to an attorney to help you, set your trust up, set your will up, do some estate tax planning to figure out, how you want to invest those assets and how you want your estate to grow. So hopefully that helps. But if you want to find someone now, I would suggest you call whoever your broker is probably Monday to see if they have someone in mind that they can recommend. And trust me, they always have someone. They never not have anyone.
It's such good information. And just like I feel like I just got my major like confirmation bias that I've been preaching about since February.
But yeah, they it's funny because we never talk about it. And
no.
there's a club. So there's a club of like guys that get together, of guys and girls that get together, and they literally they're not talking specific client work, but they're making connections and they're networking. And so every time when we meet new people and we make that connection, we're further building out our network to be able to refer people and refer clients back to each other. And that's really what it's about, because it's all about trying to add on more business. And if you can find a way to do that, that's amazing. So they definitely will have your back in the whole tax realm. Oh, and I will say, if you plan on selling during the squeeze, please, please, please plan to sell some of your shares to cover the tax purposes for federal and for state if you live in a taxable state.
It's a lot of
I had a question, or one more
What's up?
question, then I'll go. So I'm glad you brought it up, because I think when I joined one of your spaces, I brought up how people could find their routing numbers for the individual brokerage to pay their taxes, because that would be easier than routing the money to your bank account and then trying to pay, like, like if you want to use, I mean, I know we should be using CPAs, but if anyone wants to use like an online service or maybe even with a CPA, it's easier just to have it come directly out of the brokerage to the Treasury Department or to the IRS, as opposed to sending it to your regular checking and then sending it to the IRS, because once they hit your checking, depending, when we get our 100,000 or 500K strike price, that's going to be so much money. It's going to cause a lot of problems for your checking account, as far as raising eyebrows, even if they see it coming from your brokerage. But aside from that, my question is,
Okay, go ahead.
yeah,
So that's one question. Go ahead.
Okay, yeah. So here's my actual question. So when we, like, for me, I'm assuming, I don't want to assume. I correct that. I would not be surprised if a lot of people like myself would, like, when we, depending on how much money we make, and after we pay our taxes on this, we have enough where we want to give some to our parents, like pay off their mortgage. If we have enough, even like, hey, here's enough for you to enjoy in retirement, because depending based on the age you are, this could most likely help you for the rest of your life. So as far as gifting money to our parents, relatives, or individuals, and let's say we gift it after we pay our income taxes on our gains, isn't it true that depending on the dollar amount you gift, whoever you give that money to, they still have to pay taxes on that gift, because they have to consider it as income? And if so, what is that amount? And if and would something like a trust fund help negate, your friends, relatives, or family having to pay taxes on money you gift them, especially since you've already paid your income taxes? That's my last question.
If you are the person that is gifting, you are the person that is liable for the tax liability. They will not be liable for the tax liability. They will have to report it, but it's not going to be added to their income. You, on the other hand, if you gift more than, let's see, for 2021, if you gift more than $15,000, you have to file what's called a 709 gifting tax form. And what that lists is the amount that you gifted, and it gets applied to your estate tax level. So anything over that, it's $30,000 for a couple. So $15,000 for an individual. You can, if you're married, you as a married couple can give up to $30,000 without having to file a 709 form. If you gift more than that, you are then subject to tax. And where the tax comes into play is if you have gifted more. Let's say you gift up to your 11 million or your 22 million. After that, after the credit is used up and over with, you then will have to pay gift tax on those things.
Okay,
So you can gift. Go ahead.
I'm sorry. So, in other words, we would have to pay our income tax and then an additional gift tax. So, let's say
Right.
we make 100 million in a squeeze, and we pay our 50 million or 43 million, whatever, with state tax, it'll probably come up to around 50 million income tax. If we gift money after that, there's still more taxes for us to pay, correct? That tax wouldn't go to, like you said, the tax would not be on the person you give the money to. The tax would be on the person who gave the gift. But
right, the tax is on the person who gave the gift. It's not on the person who is receiving the gift.
Okay, and also, so again, in that example I gave, after we pay, again, you made 100 million in gains, and you paid 50 million in taxes. I'm just going worst case scenario. But then you want to gift like 10 million to your parents, both of them. You then have to pay additional taxes on that. So that's a lot of taxes, but that's what you would have to do, right? 50 million.
Right.
So that could
if it has gone past your annual estate tax credit. So that is what you have to be careful for, and that is why we have to file the tax forms, the 709 forms, to be able to determine how much you can actually gift out of your estate. Because the reason for gifting is to not have to pay the estate tax at the very end, because
Oh, okay.
those gifts are excluded. Those gifts will be excluded from your estate, and when you get to a point where you've reached that 11 million or the 22 million, you will then have to pay estate tax, and you don't want to have that happen to you at the end of your lifetime, where you far exceeded the gifting limits, but then you also still have a lot of money in your estate, and so at that point you're going to be paying more estate tax than a lot less.
So
And so
so in
that's
that
why Warren Buffett has 99% of his estate going to charity, just for that reason.
so when we gift, that gift, like say we give to our parents, it doesn't have to be just to a nonprofit. You can give like to a grandmother or something like that, and that's still tax deductible.
It's not tax deductible, it's just excluded from your income. So anything that's up to 15,000, you can give that away. You can give that away to someone else. But because
Okay.
that's excluded to your income, from your income.
So what
The more
about
that you add to that, the if you go 16,000, then that means that you cannot exclude that $1,000 from your income tax.
okay? So I'm about to bring up maybe the trickery that the government doesn't like. Well, again, not trying to trick anyone or anything, but so if you were to take some money and whether before or after taxes, put that in a trust fund for your parents to say relative, will that help negate the tax, or it's like there's no getting around it, even if you put it like in a trust fund?
It depends on the trust. Because believe it or not, trust will pay taxes, but it depends on what is in the trust and how the trust is set up. That's why it's important for you to go talk to get in contact with an attorney to set up, what it is that you would like to do. Because if you put assets into a trust, then that means that if the trust is what I was saying is a simple trust where it distributes all the income, and you set them up as a beneficiary, and they get a K1, the K1 that is produced from that will go to that person who you're trying to minimize the taxes for or to gift out money to. It's not going to go to you, it'll go to that person, the beneficiary.
Okay.
So think of it this way. If I have children and I put assets into it, I want to minimize my estate tax after I pass away, because I don't want some assets to be within the estate. So I make the trust the owner of the asset, and I have 2 children. And the trust is set up as a simple trust, and I have some real estate there. And let's say, at the time that the real estate is making about, I'll say $500,000 a year. The basis of my assets are already in there. The principal that's there is around, I'll keep the numbers low, 5 million. If I have 2 beneficiaries, and in a simple trust, you have to distribute out the income for the year, they're going to get a K1 for $250,000, split equally, depending upon how the trust is set, but I'll keep it simple. Split between the 2 of them, 50-50. And they each will get a K1 with real estate income, with that will have their rental income of $250K that they will have to then report on their tax return, and they will have to pay the taxes on that. You're not paying the taxes on that. At least I'm not. I would say it like that. So that's the difference. When you're trying to estate tax plan, you're trying to minimize your estate tax liability because your estate is more than the actual credit themselves. When you're gifting does help, but gifting to charitable organizations are gifting does help, and gifting is very nice, and we all like gifts sometimes. But if you're going to gift, you should gift to a charitable organization. Just my 2 cents, but
No, that makes sense. Yeah. Definitely. Gift to the charitable organization. I mean, I believe in that as well. I was just
but to
wondering
answer
as
your,
you go ahead. I'm sorry.
sorry, go ahead. You were just wondering if.
No, I was just wondering as you were talking about gifting. I was like, and especially with the example I gave, like as far as gifting to relatives. I was starting to wonder, wow, maybe the relatives would be the same, treated the same as not. I didn't think that would make any sense, but I don't know, because I'm not like you said. We should all go find like a financial lawyer or a tax accountant or CPA, that deals with the huge amount of money we're all going, our attendees that we're going to get. But that's all. But it makes sense, and yeah, definitely look for a nonprofit. But the trust thing, I'm gonna have to do it more, because you're definitely giving us a lot of knowledge and a lot of insight on what a trust actually means, and the benefits of a trust.
But it just depends. It really depends on what type of trust that you want.
Yeah,
Many
yeah.
many of them are set up after death. So some of them are set up while the actual person is alive. But the majority of the ones that we see are set up pretty much after someone has either passed away and or the parent has set up the trust for the child to be able to get some form of income from the asset that they want to exclude from their estate. And that is important because when you do a 706, right? So a 706 is an estate tax return. And listed within the estate tax return are all of the assets that a person owns throughout their lifetime. At the time of death, date of death, what do you own? And the estate tax return is all about that. And so the only reason why it's helpful to have a trust is that the estate only looks to things with your name. Now, don't sit up and do this, because I want everybody to be able to talk to someone. But from what I have seen and from what I've worked on, I will tell you the estate only taxes those items of which your name, the asset falls under your name. So your primary home, your car, your regular bank accounts, things like that. But if you have a trust brokerage account where the trust is the owner of the account, then that is also reported, but it's not taxed by the estate. It gets taxed differently because it gets taxed on its own 1031, or it's 1031, what is it? I just did this.
Thank you so much, Lauren. I'm going to try to back out so other people can join and ask questions, in person instead of having to comment. But
No problem at all.
You can keep talking, but because I don't want to hog up the limelight.
I will say it's a 1041 tax form. That's what you're gonna file your trust tax form on. But in all, and I wanted to answer your question about transferring money from your brokerage to your bank account. One of the most important conversations you can have with your bank is to let them know that you have a large transaction coming through, because number one, they won't flag it. Number two, you can tell them the sources of it. And then number three, they can work with you to be able to move that particular cash around. And they want to make sure that there's no fraudulent stuff happening there. And so I will honestly, 100%, I've done this already. Call your bank, tell them that, I potentially have this these large funds coming through in my account, and how can we make this work? I've been in the stock market. I'm a part of the AMC squeeze, and I want to know what we can do to be able to work on it.
I feel like I'm
together.
listening to myself like talking. It's just you've touched on everything. It's so I'm guessing the other day when I was ranting and raving about it, you were just going crazy.
I was saying, I literally was like, yes, somebody else gets it, not just me.
No, it's exactly what I talk about. And so I did actually find this really interesting article. I was looking into Bill Gates. You know, why not look into one of the richest men in the world, right? And how he stashes his money. What are the top people? How do they stash their money? And I found this interesting. So, I'm not gonna read this whole article because it comes from someone to do with him. But it says the result is that most wealth isn't held in the form of cash. In fact, I think of money as being held in 7 distinct forms. There are more, but these are the major ones. Business ownership, stocks, money they have loaned and must be repaid to them in futures, such as bond certificates of deposit, money parked in bank accounts, and money invested in money market funds. Real estate, such as hotels, apartments, commodities, such as gold, silver, platinum, corn, cattle, mineral rights, oil, natural gas, sugar, coffee, etc. Nominal currencies, such as US dollar, euro, yen. Intellectual property, such as ownerships to famous songs, books, movies, photographs. Tangible property, such as famous paintings, historical artifacts, rare books. And it continued on to say, let me find it again. So it was like, what do the rich do with their cash? If you are specifically interested in what the rich do with their short-term cash, comparable to the middle class putting it in a checking and saving account, there are several popular alternatives to those with at least a few million. And this first one really got me, right? It says establishing a so-called zero balance account. The rich investor has his or her money in bond certificates of deposits, commercial paper, and other highly liquid debt instruments. They write checks out of the account, which has $0 in it, and at the end of the business day, the private bank sells off enough of the highly stable liquid investment to wipe out the negative balance in the account, bringing it back to zero. That way, if the bank fails, it doesn't hurt the investor because the underlying asset are held in his or her name, not the name of the institution.
Right.
So I found that really interesting, and I think that's something that we really need to kind of like dive more into as a community, in the sense that it's like everyone like thinks about it like all just being in their bank account, and it's like that's not possible.
No, you have to. So you really have to, and I'll speak for me and what I plan on doing. I don't plan on keeping the money into one account. I don't plan on trying to keep everything within, my bank accounts. I plan on, number one, when the squeeze happens, yes, I will take out, number one, the money for taxes, because I'm going to pay in whatever quarter it hits. I'm going to pay it up right up front. I don't want to wait till next year. I don't want to wait for the IRS to have to come find me on April 15th, because you never know what might happen.
Yeah.
But I'm going to take care of that at that point in time. Then what I'm going to do is I'm going to reinvest some of those funds into different stocks on the exchange. So I'm looking for things that I can put my money into that will also grow me wealth. And not just and grow have a pretty good amount of growth. So you talked CDs, you talked about I'm probably going to invest in the index funds. I probably will invest in blue chip stocks. I probably will go invest in Disney, Tesla. Let's see what else.
The traditionals.
the basically all of the traditional stock that we have, and then I will move into treasury bonds, and I'll move into crypto, and I'll move into that. Not to mention, I will then probably start to invest in some real estate. We all have been talking about how the real estate market is on its own bubble, and so I think that the prices are going to they may drop by the time we come out of the squeeze.
I'm on that same mindset with you.
they may drop by the time we squeeze, and it may be an opportunity for a lot of us to get into the real estate game in order to be able to figure out, you know, how to build upon those assets. And so I probably will be buying, you know, residential properties at first, and figuring out if I can invest in perhaps some commercial, you know, real estate buildings here in California and in other parts of the United States. I may even start my own company at that point, and, you know, invest in something that I would want to do. So I may actually start up L2BU as a actual physical LLC. Who knows? Something else that I may do is invest heavily in solar and into the new technology that's coming out on that level. So, you know, the electric vehicles, the various components that go into those, investing in those investing in those types of companies, getting in on the ground, on the probably the ground floor of many of them. In the conversation that I had with my bank, and I pretty much trust this person 100% hands down, and she kind of walked me through and let me not be so afraid of, you know, the amount of cash that's going to be in there. But then she is also helping me to get into my own opportunity zone fund if it's still available. So, you know, I'm it's not just me, I'm contributing to it. They already have one, but I'm just going to contribute to it and to get a piece of that particular pie. What's so cool about that is that while the assets will grow, you know, tax free, you will get a K1 at the end of the year, you know, detailing how it kind of panned out and made out. And it's definitely interesting to see how your banker really does take the time when they know that you actually have money coming in. Like, not that I didn't have cash, but this
Isn't that
particular
terrible?
individual.
Isn't that terrible? Like, you're somebody. It's okay. We'll take our time with you now. Oh, I get it. I get it.
Oh, not that I didn't have cash before. I hadn't had this particular conversation in a long time. And so it was very interesting to get kind of like a flashback from the past, into, you know, the things that I should be doing, and how I should go about trying to break the amount of money up once I've already made my payments to both the federal and the state. And it's really important that you do that, for a number of reasons. And I've also, you know, portioned a really good portion of my stock already to charity. So I already have broken down how much I probably will have to pay federal and state, the amount that I want to give to charity, under the current rules, and then whatever else I have, that's free for me to play with.
Right.
And so you really have to look at and determine what the amount of shares that you have. You do price points going up the ladder, and then you can kind of figure out what type of wiggle room you have in order to make everything work. And it definitely becomes a bigger issue if you don't know what you have and how to kind of move it around, and how to put it in different tax-based strategies as you go along. So I talk about setting up an LLC, right? And I may do that. Or an S corp, or a some form of a flow through entity. And the reason why depending upon what you want to do, will depend upon the type of entity that you set up. But one of the key things about a about flow through entities, except for, and I think S corps have their own designation, but you can contribute to a you can make a bigger contribution into your retirement fund through a get the right terminology.
I guess there is another
Go ahead.
question. Reef is asking, from what I understand, you have to pay capital gains within 18 months. Why would you not put the amount of taxes you owe into something that you can gain and using that money until the time to pay?
Why?
Yeah, so like putting it into like a CD or maybe reinvesting it and trying to make any kind of like extra gains or anything like that.
The reason being is that if you live in a state, if it holistically depends on when we squeeze, but the IRS rules, if you don't want to get caught by the IRS and or your specific state, which is why I say talk to your CPA, they know the rules that are in your specific state. California does not allow, so let me back up. When we talk taxes, estimated taxes, and you look at how much you owed this year versus how much you owed last year, and you talk about how what your AGI was for the year. For federal, you're supposed to pay 110% to be considered safe harbor. You're supposed to pay 110% of whatever your AGI was from the previous tax year. For California, it's also 110%. However, California has a rule that says that you will not have safe harbor if your actual AGI for the year is greater than $1 million. So you have to pay the actual amount for California. Now, for federal, depending upon where it falls within the year, you are going to have to pay, you're supposed to pay 25% in every quarter. And depending upon where the squeeze falls, we may have to pay 50% of the tax in at that time if it falls in Q2. And Q2 is going to end on June 15th. If it falls in between now and June 15th, you're supposed to be paid 50% in. If it falls 50% of whatever your AGI at 110%, you can always get safe harbor for federal, but not for state. So that's the difference. So if it hits in June, you're supposed to be 50% paid in. If it hits by September, you're supposed to be 75%, and then by January, you're supposed to be another 100% paid in, making it easier for you to do your extension. Now, some don't like to do that. Some do like to hold out till the last minute and the last day man. But then what they find is that the following year, you have estimated tax penalties, you have a large tax bill due by the time you get to April 15th. And, sometimes you never know what may happen in life. That's also a part of it too. So it's easier said than done to just go ahead on and give the IRS whatever funds that you have. But at the same time, you have to decide whether or not the pros outweigh the cons, because that estimated tax payment penalty is pretty hefty. And I unfortunately don't want to go through that. But that's just me. And that's what I've seen. I don't like having to give out phone calls on the day of the deadline or a couple days before the deadline asking a client, hey, I need you to pay $500,000 because you did not pay, you made no Q1 through Q4 estimated tax payments that I told you to make. And now you owe something like $500,000 plus another $10,000 in penalties. And I've done it on the actual day where I've had to have a client pay out um, I think it was like 2.7 million for federal, and then another 1.1 for state. So this is real, and that's not something that you want to play with, because it's hard to maneuver funds around that way. And you also get tagged with penalties for not paying on time. So that's just my 2 cents. That's why I'm not trying to wait. I would rather pay Uncle Sam now, and then whatever funds that I have left with, I will invest. And if my tax ends up being a lot less, I'm fine with that. But that's why you go to a CPA, to be able to determine. They can run a projection that will allow you to see what your tax could possibly be at that point in time. That's why we're saying go see a CPA, because at that time, and I probably will go see one too. At that time, can you run a projection that will show me what my potential tax liability will be, given I have these long-term capital gains, which are taxed at different rates, or short-term capital gains, and I have this other income. So in allowing them to see that, they can give you a better window and picture as to what your tax liability might be come April 15th. So that's why. So it's not meant to try to scare you into trying to pay. It's meant to more so protect you from having to have a large tax bill due in the following tax year, because you never know what may happen in life that may throw you for an entire loophole. And it often, if something happens to where you can't do it, or you there's a problem in the family, there's the person who was supposed to be taking care of it passed away, then you have to deal with the estate tax rules and filing an extension. But if the person who passed away had access to all the accounts, and it just gets to be a mess.
I could only imagine that, like, oh hey, this person had like $50 million, now it's all gone and they've passed away, and someone has to pay the piper.
One bad mistake people make: people should not keep secrets from their significant others.
Oh no, no.
There is so many. You talk about people passing away, but you have to. So a part of that meeting, the initial meeting that we have, is that we ask people, do you have all your passwords written down for your bank accounts? Do you have for your bank accounts, brokerages, and everything else? Because if you pass away and nobody else has that information, how are they going to get your money out? They're going to have to then go through the ringer in trying to get your money out, rather than having the login passwords for everything else.
That is
So
actually kind of terrible to have to think about.
So it's something that you have to think about. And we ask people all the time. We'll turn to, depending upon with the couple, we'll ask the spouse, do you have access to his bank account? Do you have access to his brokerages, to whose name is on the deed of the house? Is your name on there, or is his name on there? Or depending upon the couple, it just is. It's very interesting when you talk to people and you're trying to figure out their story and what they're doing. Asking them these questions really starts to spark their mind up, and to help them to get ready.
Oh yeah, for sure. I mean, it's the best way we can really start this conversation. Like, it's terrible to have to be like, hey, you need to safeguard yourself, but man, life's too funny. Like, so it's like, I don't know if have you seen the movie Soul yet?
Yes.
Like how he just gets, like, he finally gets his break and then he dies. Like, and he's like, no, I'm not going out this way. Like, I just got my chance. Like, life's funny
Right.
like that. So
you just don't know. You never know. And so it's important to be prepared for any and all type of situation. And it pays to just be honest about whatever it is that you're going through. And it's okay.
exactly.
Trust me, we've seen it all. We've seen it all, have experienced it all, and we want to help you to get to be your best financial self. And so that's why we work with the banks, the brokerages, and the attorneys all on your team to be able to help you to do that.
So I think we can start wrapping it up here soon. We've been going at it for almost 2 hours. Do we have any final questions, or do you have any final thoughts or suggestions for anybody?
Hopefully I've been helpful.
You've been very helpful. I mean, I'm gonna have to actually go back and rewatch a lot of this so I can just like absorb it, because there's been a lot of stuff you've talked about. Like, I've been studying the different bonds and the different situations, tax situations that you've been talking about. Like, I've really been trying to brush up on that since February, and so it's like as you've been talking, I'm like, oh, okay, that piece goes there, that piece goes there. Thank you for that. Like, it's at least for me, it's been very helpful.
But yeah, I tend to kind of try to get into some of everything, but for me, the research piece of it is still ongoing. As far as what's happening in the bond market and the real estate market, I'm still keeping my ear to the ground and trying to really understand what all is happening. And I think that people really are looking, they're looking for guidance on trying to figure this stuff out. And it's I think I've given myself more wrinkles since this thing has started.
Don't you love it?
My brain is.
Let's see.
Go
First
ahead.
Strike says, I personally have all my passwords locked in a very safe place on my computer, and I have instructions to how to get into those if something were to happen to me. I also have instructions on whom the money goes to. That's awesome.
Right.
MJ writes, won't it be easier to trade in the Roth IRA? Try to avoid the capital gains. Guys, Uncle Sam
The whole
wants his
point of
money.
this is the whole point of this is not trying to abate tax. You guys are trying to abate tax, which is something that I don't plan on doing, and I don't want to do that, because the more that you abate it, if they catch you, they can go back 3 years. And then if they go back 3 years and found something that you didn't do correctly before, they can go back 7. So I want to be on the open up, and I will minimize my tax liability to a certain extent. And one of those things that you can possibly do is to set up, if you contribute money to an HSA, that can go tax free, and that can just be forever and ever tax free. Primarily because the earnings are tax deductible on your actual tax return. If you a Roth IRA implies that you are putting in after-tax contributions. Well, if you're not putting in after-tax contributions, you're still going to get, if you take out principal, I think in a Roth, if you take out the principal, you're not taxed. But if you take out earnings, those earnings have not been taxed yet. And so you will still get taxed at some point. So I would not try it, but like I said, talk to your CPA. If they allow it, then that's on them, but it's not something that I personally would do.
Your name. I didn't want to mess it up.
Well, cool. Hi.
How
Is
are
it
you?
All right, was that
Mokulele?
How do you say your name?
mine? Oh, it's Mokulele Koa. It's actually just a play on 2 words. Thanks for the invite tonight. And I was listening in, and Kendra, right? Yeah, she's definitely very knowledgeable, and especially not to try to game the system, especially when it comes to taxes. And she's pretty much dead right on with the Roth IRA. Anything, as long as it's been established for 5 years. Then you can take out your initial investment tax free because it's already been taxed, but you have to watch out for gains. So everyone pay attention to that.
Yep. I absolutely agree with that. There's always a caveat to the things that you want to do, and you always have to go back and look at the rules. No matter what you do, you always have to make sure that you can follow it up with a follow up your position with a sound rule, and that's important in the world we live in.
It is, and that's exactly what we're fighting against right now, guys. Like I guess that's where I get a little disheartened a little bit, is that, you know, we're out trying to fight the corruption and just the shenanigans that are going on. And then I hear a lot of the community just go, "Hey, let's go do this stuff." And it's like, no, that's not how this all works. Like you honesty and, you know, doing things the right way is how we create change, and not sitting there trying to go, you know, do the same things that everyone we're fighting against is doing. I just, it makes me sad.
Yeah, for sure. I think we saw that today with the Fox News head. I think it's Charles or whatever his name, Gasparino. I don't know if anyone followed that, but you know, to me, there was a very immature and very direct attempt to, you know, belittle what we're doing. But I just don't think that they actually understand the, you know, how big we are, and that's why I got into this in the first place in January. You know, I do have experience as a trader on Wall Street. Not anymore, but when I left it in, you know, 2011, I was, you know, disheartened by it, and I recently got back into it in January, and you know, I made a trade with Apple, and you know, I said, you know, Apple's coming out, and you know, I know they're going to have good earnings because everyone's sitting at home making purchases, so I'm going to buy some Apple. And then they came out with earnings that were awesome, and then the stock went down. I was like, what the heck was that? And then that's when I learned about Wall Street Bets on, you know, the 27th of January. And I looked at it and I was like, wow, there's a million people in here, and a million people times whatever can move a stock. And then the next day there were 6 million, and after that, it's 9 or 10, whatever it is. And then I started searching and found AMC because they're, you know, that was one of the top stocks, and it just made a lot of sense that, you know, it's strength in numbers, and it continues to add up, and it's real. You know, we really do. I really do believe. I think we own more than the float. So eventually, this will have to shake out, and I think, you know, the whole when there's people like Fox News and other news medias, MSNBC, whoever it is, get a hold of this and they try to talk it down, and I think we're actually doing something. It just makes sense, and you know, I kind of hope everyone feels the same way. And when we have down days or down weeks, it's kind of just hang in there, and you know, eventually it'll pay off.
I 100% agree with you. There's no, yeah, I agree with you, 100%.
There's a question on YouTube.
Okay.
Currently
Oh
live
wow,
in
are we
Florida.
live on YouTube?
Yes, we are live on YouTube. We have been this whole time. Currently live in Florida, but plan to buy another home in California. Will I be taxed twice after the squeeze, that is?
If your residence is in Florida, Florida has no state tax. So if you don't move, I believe in California to be considered a resident, you would have to be here for at least 180 days, and have a domicile here in California, and have no ties to Florida. I think you should be fine because you would still be considered a Florida resident, and none of that income was earned in California. So you will only be taxed on whatever earnings that you have within that particular state.
Yeah, because I was thinking, isn't it on your address on like the day of the last year, like the last day of the year or something like that? Is that how that works, or?
Well, it really goes to, so if you're an actual physical resident in the state of Florida, Florida has no state tax, and so
Right.
you're only taxed for federal tax purposes. On the last day of the year, depending upon what you do, each state has its own residential laws. And let's say you move to California, hopefully you guys can still hear me. Let's say you move to California and you move here pre-squeeze, and you've established a home here, and you've established a bank account, and things that will lend to the effect that you were going to move here, then and it's in that 180-day window, you would file a non-resident return. And what California would do is they would try to split the income based upon the number of days you've been into the state. And so they would try to do it that way. I don't suggest that you move to California if you're already a Florida resident. I say let the squeeze happen, then you you cash out, then you come to the state, and then you can be able to do that, because none of that income should be taxable to California, as it never occurred within the state.
And that's why I love my home state. We're in the Tampa Bay area, so I just kind of giggle every time lady who's out in California, I'm like, oof, you better be putting that extra 13 to 20 some odd % back for those taxes. She just grumbles at me every time. It's ruthless.
Yeah.
The other states are ruthless with your guys' taxes.
Yeah, they are. I'm hoping that we'll get some much needed relief on the tax front. We need tax relief for some of the highest paid states. So I'm hoping that California will start to conform a little bit more to some of the other states, because we are taxed a lot, but we don't see a lot of benefits.
You're welcome, David.
On the back end.
Does anybody else have questions? We do have a little community night we are hosting after this in our Discord, if you guys want to stick around for it.
Okay.
But other than that, thank you for coming on. It's been a pleasure, and we'll be.
I will be
so
back.
much.
When are you guys doing these things?
I'm trying to do our podcast like Monday, Wednesday, Friday, but you're welcome to hang out in here anytime. So then you don't actually have to like host your space or whatever. So like if you do have to leave, your community can still I can put a little thing in here for your community and whatnot, so that they can just like kind of hang out and be able to continue talking even if you leave.
Nice. But I'd hate to miss you guys. I love talking to all of you tonight.
We this is where we hang out. Like we have our market hours, we have the classrooms, and so like my husband today did his first episode with the first chapter of a textbook that he's going through with the community. So we have that, and then like we hang out in here on and off throughout the days, Sunday through Saturday. So it's just we're just starting to grow. I think we've been up for 2 weeks, the Discord. So
wow.
It's been a very rampant thing that we've been doing, but it's been fun.
Nice.
It's been great. Thank you guys. Thank you so much for joining us, Learning to Believe.
I'm so happy to be here. Thank you guys for having me. This has been I enjoyed having the geek out session, and hopefully I didn't.
Uh-oh, did we lose her?
We lost her at the very end.
Oh.
I hope we didn't lose her.
No, I hope so.
No, I'm here. Can you hear me?
Okay, yeah, we can hear you.
But yeah, no, thank you very much, ladies, for having me, and it has truly been an honor just to be on here. And I literally have been geeked up about it all week, and so
we have been. At least I have been too. So I'm just like, guys,
Me
just coming up, and they're like, oh, okay, when is this? Like the guys, they're guys. They have other things on their. We're like, no, she's coming on. Come on, let's go. So yeah, I've been thoroughly I've been dancing around the house. Like even in your spaces today, I was like pacing around the house. Like, okay, get this done. I gotta get this done, and like, let's go. So yeah, I'm a nerd.
Well, we'll definitely work on setting you up to come back.
I wish I could do half of what you guys have done tonight. This is truly amazing.
Oh yeah, well I'm sure we will be in talks about some other stuff.
Honestly, you guys
yeah, maybe we'll
pull you down and we'll have a little chat with you and kind of figure something out. It'd be great. I'd love to continue working with you.
Same here.
All right.
I'm so
well,
sorry
we'll
that my
figure
Discord
that
broke
out.
down.
Yeah.
Yeah.
All right.
Yeah.
Good
All
night,
right.
YouTubers. We'll catch you next time.